We keep hearing a lot that stock market is a zero-sum game, and on the face of it, it sounds logical as well. But in this video, we will debunk this widely held belief with some real-life examples. Before moving ahead, if you are new to this channel, go ahead and hit that subscribe button. We are building the biggest stock market library for Indian traders and investors, and it would be great to have you join us in this journey. Okay, so the question at hand is whether the stock market is truly a zero-sum game. For answering that, we have to first answer what is a zero-sum game. A zero-sum game is one in which one participant's gain is at the expense of another participant's loss. So if you and your friend bet on a coin toss, it would be a zero-sum game. If you win, your friend will be a loser, and if she wins, you would be a loser. A similar analogy can also be made about casinos and gamblers. If the casino wins, the gamblers lose, but if the gamblers win, the casino loses, right? The reason such games are called zero-sum is because at the end of the day, if you add the profits made by the winners to the losses made by the losers, it would add up to zero. So the defining character of a zero-sum game is that someone has to be a loser for someone to be a winner. Now, stock market does sound a lot like a zero-sum game, doesn't it? After all, every trade has a buyer and seller, and both of them can be right. If one is a winner, other has to be a loser, right? Well, not necessarily true. Let's take few real life examples. Mr. A bought a stock of Titan when it was trading at 5 rupees. When the stock ran up to 50, he decided to sell his shares, and the buyer of those shares was Mr. B. Now, Mr. B was just as patient as Mr. A and saw Titan's share soaring to 200 rupees. Now, he decided to sell his shares at 200 rupees, and this goes on and on and on. So, in this story, who is the loser? The answer is nobody. Everybody is a winner in this stock as long as Titan's growth story continues. On the other hand, let's take an example of Unitech, where almost every investor lost money. Every buyer had to sell their shares at lower and lower prices. There were no winners, only the losers. So, what does it all mean? See, the classic mistake people make is that they think that the shares of a company are just as the same as a coin in the coin toss or those chips in the casinos. And that's where the whole confusion starts. The reality is that a company's stock is a very much living and breathing entity. It can bring more money into the market, or it can suck the money from the market depending on company's financial performance. If the stock is that of a financially strong company, it basically makes everyone richer. So the winning investor is not getting richer at the expense of someone else. She is getting richer because the company has made more profits, and those profits are reflected in the share prices. Similarly, the stock of a fundamentally weak company makes every investor poorer. And they are not getting poorer because someone else is getting their money. No, they are getting poorer because the company is losing money, and that poor performance is reflected in the share prices. So a better analogy for stock market is that of a train, where people get on and off at every station, but everybody reaches their destination as long as the train is on the right track. But if the train is on the wrong track, everybody will be in trouble. So stock market is not a zero-sum game. It can be a positive sum game for investors of good stocks, or it can be a negative sum game for investors of the bad stock. Now, before we wrap up, there is one last thing. There is a zero-sum game in the stock market, and that's in the world of derivatives, that is futures and options. But we will cover more of that topic in the derivative videos. Stay tuned for that. Alright guys, I hope you learned something new today. If you have any questions regarding this video or stock market in general, do ask them in the comment section below. Also, don't forget to subscribe to the channel.